Stop selling, motherfucker. Alright, good evening ladies and gents, welcome back to Compound Interesting. In today's video I have a load of interesting charts that I want to share with you. The first of which is this one, showing that retail has finally capitulated, meaning they have become net sellers rather than net buyers of stocks for the first time in this entire bear market. So as you can see from this chart, the left axis shows the number of billions of dollars that retail investors are buying, and that's following the light blue line on this chart, and the dark blue line is just the price of the Nasdaq. So as you can see, when the Nasdaq was absolutely pumping since COVID, the retail investors were going crazy buying stocks, and then when the market started to crash or had a bit of a dip, retail has absolutely stopped buying and now is eventually become a net seller, so selling almost $5 billion more of stock than they have been buying. So now if you're a buyer right now, if you stuck around, which the majority of people have completely left the space, investing in general but also crypto, but we're looking at the Nasdaq right now. But yeah, if you're still sticking around, you're finally going against the crowd, because the crowd had been buying the dip ferociously for the last few months, but finally they've capitulated and said, okay, enough is enough, I'm out, I'm selling, I'm packing up my bags, the stock market is a scam, crypto is a scam, and yeah, they won't be back. They'll say they'll never come back again, but they'll be back in the next bull run, you can be assured of that. So if you're sticking around during a recession, during a bear market, you're one of the few people, for some reason everyone knows that buying during a recession or buying during a bear market is what you should be doing, but no one is doing it. Like, everyone's saying just wait around, the stock market's going to crash even more. And yeah, is it going to crash even more? Probably. Might you have to wait a few years to see a return on any investments that you're making right now? Probably. But are you buying great assets at a great price given a long-term time horizon? Absolutely. So just like my great-grandfather Jordan Belfort always says,
you know what? I'm not leaving. I'm not leaving. I'm not fucking leaving! The show goes on!
This is a total buyer's market, meaning that buyers can set limit prices and those limit prices will eventually get filled. So if you're a buyer in this market, it's much easier to be a buyer than to be a seller in this market. If you're selling into this crazy FUD, like, that's just a risky game to play. Like, I don't think anyone who sold in any previous recession was happy about selling over the long term. Like, the only reason you should be selling is if you have to sell, if you can't pay your rent or something like that, obviously. But for me, well, not financial advice, for me, I'm definitely not selling. And right now is a buyer's market. When everyone's left, when everything's boring, this is what happened in the last crypto bull run. Everything got really boring, everyone left the space, but the people who stuck around, they were the people who did unbelievably in the next bull market. I unfortunately was one of the people. I didn't completely leave, but yeah, I wasn't really paying attention. I was just buying the odd bit of Bitcoin, and had I stuck around, I would have done extraordinarily well. There was so much opportunity in the bear market. So yeah, just keep sticking around, and I want to give my opinion on the best places to look, to research, and to invest in during this recession. Okay, so I said, in my opinion, it's probably a good time to be a buyer rather than a seller. But should you just be buying the S&P 500 or the Nasdaq? In my opinion, probably not. If you actually want to make great returns, there are a few sectors that will yield the highest returns, in my particular opinion. These sectors are the ones that I will be researching the most, the ones that I think have the highest upside over the next bull run, over the next decade or so. And yeah, the indexes are full of crap. The indexes are full of zombie companies, and there's only actually a few companies within the S&P 500 or within the Nasdaq that actually make all the gains. So if you can find a few of those, or a few small caps that do really well, or a few cryptos or a few NFT projects that do really well, you can massively outperform the indexes. And to add to that, generally the things that have been going up the most in the last bull run are the things that are actually down the most now, and the things that are up, that go up the least over time, are the things that have gone down the least over time. So buying stuff that goes up more over time at a really cheap price makes a lot more sense than buying stuff that doesn't really go up much over time and is still at quite a high price relative to like the growth kind of names. So I'll show you this chart here actually before we go into the individual sectors. So this chart is essentially showing the revenues generated for different sectors over time. So you can see the annoying thing about this chart, the only annoying thing is that the left axis doesn't start at 0 on everyone on each of the charts, so it's kind of hard to see which ones have actually performed the best, because some of them actually are growing way faster, but they all look like they're going up in a similar amount because it doesn't start at 0 anyway. And the y-axis is also different. But if you actually have a look at the numbers, you can see information technology, healthcare, and maybe also consumer discretionary and consumer staples have done the most since the dot-com bubble. They have the ones that have performed just in revenue, the increases in revenue over time, and the increases in revenue, that's kind of one of the main things I like to look for in a stock sector. But I think the more interesting thing to gain from this chart is, for me, it shows the sectors that I will be avoiding investing in over the next decade. So like energy is doing really well right now, but over the long term it's pretty flat. It hasn't made significant gains. Obviously it's the same with utilities. Revenue's actually gone down over the last 20 years. Financials pretty much hasn't done anything. Crypto is also going to disrupt that as well. Materials has done okay recently, but over the long term it doesn't really perform that well. Industrials does alright, in fairness, and the general S&P 500 does alright, and communication services is going to be another one that I avoid. But we know that some of the companies in the S&P 500 or the Nasdaq are actually within these sectors that underperform over time. So that's why I kind of I don't buy index funds myself. I think you can if you don't have time to research, but this is obviously an investing YouTube channel, so I'm guessing you're here to actually beat the S&P 500 or beat the Nasdaq over time, and that's not an easy task. But if you have a long-term time horizon and you're not really interested in investing in, as I said, I'll be avoiding these sectors that don't really do much over a long-term time horizon in regards to growing revenue. Because I think if you're young and you're investing, what is probably the better strategy is to go after growth rather than safety, because volatility doesn't matter as long as the long-term trend is up, and that's usually what happens with these kind of growth sectors. I just want to show you another chart, and then we'll go through what I think are the most interesting sectors to invest in over the next few years to get massive gains over the next decade. So right now everyone's saying, oh, stack cash, but stacking cash is very short-term mindset investing. Cash might perform well over the next year, maybe it might perform well over the next 2 years if stocks keep going down. Alright, so this chart essentially shows the risk over different time periods of different portfolio allocations of cash, bonds and stocks. So the higher the bar is, the more risky it is. So over a 1 year time horizon, it shows that the S&P 500 is the most likely to have negative returns, so negative real returns of 10% or more. So the S&P 500 is the most risky over a 1 year time horizon, most risky over a 3 year time horizon, the most risky over a 5 year time horizon. But over a 10 year time horizon, it's actually cash and bonds that are the most risky over a 10 year time horizon, because you're actually going to lose in 24% of 10 year time horizons. You will lose more than 10% in real terms holding cash or bonds. So if you're a very long-term investor like myself, it is the most risky to hold cash and bonds, and that's the thing people are saying to hold right now. Everyone's saying buy bonds and buy cash, but that's actually the most risky when you're looking at a long-term time horizon. And in my opinion, holding cash or bonds over the next 10 years, there will be a 100% chance you will lose more than 10% in real terms. A 100% chance. But with stocks, there's a much lower chance, in my personal opinion. Like, the money expansion might take a while for it to turn back on, but it will definitely turn back on, and it will be very strong over the next decade, and pretty much until the US dollar goes to zero. So this chart, like I was saying before, just shows essentially growth stocks are down the most this year, and the stocks that are down the least are value stocks. So buying value stocks when they're still relatively high in comparison to growth stocks, growth stocks keep going down more than value stocks in the short term, But in the long term, growth stocks will outperform value stocks, in my personal opinion. And that goes for crypto as well, like everything that's kind of, growth related or technology related. So let's go through these sectors that I'm most interested in investing and researching for the next few years, because I think we'll have time to research, we'll have time to invest and buy these kind of sectors at very good prices to be able to have, like, over the coming decades, really strong returns, beating the S&P 500 and the Nasdaq, and perhaps even Bitcoin. Well, maybe not Bitcoin, but we'll see. The first major sector that's probably worth researching is AI, and an example of a company that's involved in AI is Tesla. And if you want, like, Tesla's obviously doing the self-driving, but they also will potentially solve real world AI, as in general artificial intelligence as well. Also, if you think AI is going to be big over the coming years, it probably is, then AI will require a huge amount of computing power. So you can think, okay, AI is going to be huge in the future, and what will AI need? AI is going to need a lot of computing power, of high speed computers, high performance computers. If you put two and two together, you can see that maybe Nvidia would be a good play there. So Nvidia stock, they make really high performance GPUs and stuff like that, and they're down about 70% from their all-time high right now. So that's something I'll be looking into again, buying more Nvidia stock. I have a little bit. The next sector that I think will continue to grow over the next decade or two is gaming. So gaming is growing a lot because the average age of a gamer has been increasing over time. So this means, like, a lot of people who start gaming in their teenage years, they'll continue on gaming well into their 30s, and potentially, like, the 30-year-olds in 10 years will still be gaming when they're 40, and then those 40-year-olds will still be gaming when they're 50. But to add to that, every new teenager that comes up will also be gaming. So the market for gamers is growing and growing and growing. Now, there might be different kind of games for these different kind of age categories, but it's kind of interesting that people continue to game well into their 20s and well into their 30s. So I think most people know the major gaming companies, but the one I think is probably the most interesting is probably Activision, but I'll have to look more into them. But that's also like Take-Two, Tencent, etc., etc. The next sector is crypto, and I don't want to spend too much time on crypto, but we can all agree that over time it is a vastly growing sector, and there's more and more people joining the crypto space over time, and more utility and products being launched on crypto that are useful to people. The next sector is Web3, so that's like a layer on top of crypto. So Web3, an example is Yuga Labs, so basically NFTs, digital ownership, etc., etc., metaverse. The final sector that I'm interested in researching and investing in over the next couple of years, for the next decade, is biotech. Like I showed you in that previous chart, the healthcare revenue over time has been booming, and yeah, people are going to need, like, the biotech industry is really going to be a massive disruptor over the next 10 or 20 years. And the main company that I'm aware of that I've researched the most is CRISPR, but I probably have to do a new up-to-date research on CRISPR. CRISPR technology is basically gene editing, which is like crazy. Over the next 10 years, like, that can have incredible impacts on human society, just like all these sectors that I've mentioned. But yeah, that's going to be a big one in my personal opinion. So if you haven't seen my video on CRISPR, I'll leave it up there. I think it's one of my best performing videos. But yeah, for me, I'm just going to be researching, learning as much as I can, not leaving the space, staying here, bringing you these videos, bringing you my research, and just DCAing into my highest conviction bets, no matter what the price is, especially when everything is down already 30%, or it might go down to 70%, whatever. I'll still be DCAing at all these low prices for the next decade. I don't care if it goes lower. That's just how I'm playing it. Not saying you should do that either, but that's just how I'm thinking about it. If you enjoyed this video, I'd hugely appreciate it if you could smash the thumbs up button, subscribe if you're new, and hit the notification bell, because I'm such a small channel. I don't really play to the YouTube algorithm, so hit the notification bell if you actually enjoy my videos so you can see them all. Thank you so much for watching. I really appreciate it, and I can't wait to see you in the next one. Cheers.